Good morning, everyone. Welcome again to the GRC Summit, and welcome to what I think is one of the most significant topics of discussion and a panel as part of the GRC Summit. Welcome to the Convergence of Cyber Risk Management with ORM, Operational Risk Management. Let me introduce myself. My name is Rohit Bedi. In my role at MetricStream, I manage, lead the global partnerships and alliances. And as some of you are aware, a large part of our business, and quite frankly, the culture of our company, is to do business around the world with our partners in serving our clients. Also part of my role, I've had a chance or the fortune of building some of the strategic regions around the world for the company. And that journey today, along with Sudipta, who's seated in the front, I'm building regions in Asia Pacific, including Australia, India, Singapore, Middle East, and Africa as well. And this particular topic is very pertinent to me. Let me start by making some opening comments, and then I'll move into introduction of the panel. I'd like to talk about something totally different than the topic. And that's about, in our world today, we have come to realize or be conversant with certain words, company names, business functions that have become very prevalent in our daily lives. And when we say those words, the next thing comes to our mind. So when we say Uber, the next thing you think about is what? Taxi, convenience, easy, something. You think about, you say the word Google, and something comes to your mind. When you say the word cyber, I don't think cool or safety comes to your mind. The next thing that comes to your mind is risk. And the next thing that comes to your mind is threat. So in my journey around the world, along with other executives, and the fortune of meeting a lot of clients and partners, I've come across this topic, cyber risk management, as probably the number one topic that I could have a conversation, whether I'm here in the United States, or I'm in Europe, or I'm in Asia Pacific, or Africa, or Middle East, or Australia for that matter. It's the number one calling card I have, and I will always get a meeting with that. But let me share with you that in that journey, in the last 12 or 18 months, what I have found as the bigger topic that is on everybody's mind now is not just cyber risk management. It is now, how do we manage this along with our larger risk enterprise? How do we converge cyber risk management with operational risk? And what does that mean to us as a company, to our executives, to where we live, in which country we operate? And I couldn't think of a better set of leaders that we have than what we have today with us to be able to talk about that topic with you. Now, just a few minutes ago, I'll share with you that I just met with my panelists upstairs, and we just did a session, a brainstorming session. And as I did that session, it was pretty evident to me the amount of knowledge that they have. And so what I would encourage you is to listen in for the next 40 or 50 minutes. You'll have an ability to ask questions as well. But what I would really encourage you to do is to seek them out after the panel, during the summit, after that through your LinkedIns, and be able to draw upon that knowledge. So I'd like to welcome Jakub Petersson, Director, Enterprise Risk Management from the CNO Financial Group. Welcome, Jakub, seated on the very far left. In the middle, I'd like to welcome Jessey Abraham, Vice President, Technology Risk and Compliance Officer for Federal Home Loan Bank of New York. Welcome, Jessey. And I'd like to welcome Garrett Smiley, CISO and Vice President of Information Security at Serco, seated on my right, on the extreme right. Welcome, Garrett. Now, before I ask them to introduce themselves, and we'll get into the panel, here's how we thought about doing this. So I'm going to ask the panelists to introduce themselves. I would also like for them to, as part of the introduction, talk about one particular question that is on everybody's mind. After that, there are about 5 to 6 topics that we polled that I'm going to bring up with the panelists. I will seek out one of the panel members to talk about that topic, and then I will seek out either an amplified view or a contrarian view. And we know we love contrarian views. After that, we will open it up for panel Q&A. With that, I'd like to invite Jessey Abraham first to introduce herself. And the common question that I'd like to ask in their introduction is, when it comes to cyber risk management and the convergence, what is the biggest topic on her or their mind that they want to be able to talk about?
Thank you. Thank you for this opportunity. My name is Jessey Abraham. I work at Federal Home Loan Bank of New York. I'm a vice president. I am technology risk and compliance officer. I have 20 years of risk management experience. If I had to keep it really simple, I did a little bit of I did small consulting risk management. I did big consulting risk management. I also did, in the span of my years, I also did big corporations, and I was in small companies as well. Currently, I'm in a company of 350 people. I have, throughout the phase of those 20 years, done business process risk management, SOX, operational risk, compliance, and now in my current designated role as technology risk and compliance officer, I have built a team, a brand new team, and I have been building a technology risk and oversight program, which, exactly to this topic, sits underneath operational risk. So the past 2 years have been, I feel, a combination of all my experience that this is the right time to be able to perform this function. In terms of your question, why cyber risk? My interest in cyber risk, obviously, besides the fact it's part of my job responsibility, I feel really connecting the board to the first line, second line, third line really matters. What the board says at the highest level in terms of appetite. As we as risk managers as second line, I feel it's our duty to really translate that, because maybe in its current state, it is not as clear as it could be to first line. So in terms of how your company responds, their risk response to the new and emerging risks out there, it's important that we reflect what the board has requested us to do.
Thank you, Jessey. Garrett?
I agree. Part of my role as a CISO is to translate risk, if I'm doing my job correctly. And I have to keep in mind who my audience is. So to Jessey's point, when I'm speaking to the board of directors, I have to speak to them in the way that risk is communicated as a potential liability, right? When it's the executive management team, I'm generally speaking to them to say, you know, you're allocating budget against information security and risk management, these different things, and I need to educate them on what that spend brings them, and probably even more importantly, what it doesn't bring them. But knowing your audience is important, so I would say that, I guess to introduce some levity, I'm like Tom in The Godfather. Mm-hmm. He advised the Godfather what to do. That doesn't mean that he got to tell him what to do, right?
Well said.
The Godfather said, I want to go to the mattresses. We're going to go to war. I advise you against that, Godfather, but if you do, just know it's going to have these impacts. So that for me, that's the main thing that I have to remember. Who's my audience? How will this mean the most to them? You know, I'll throw one more in there. When I'm speaking to legal, I speak to them along the lines of what has material impact. So just knowing your audience and speaking in their language with a taxonomy that you both commonly share is very, very critical in trying to help identify, illuminate, and hopefully mitigate the risks that we have in our environments.
Great analogy, and if I remember correctly, godfathers live and die by their consigliaries, so.
They do, very important, yeah.
Awesome. Jakub?
Jakub Petersson, I work for CNO Financial. It's a financial services industry as a director of ORM. And I have some knowledge and experience in all three lines of defense, owning the risk, monitoring, and also being an internal audit. And to me, in my current role, when I look at cyber, I look at it from a more of a corporate perspective. That it's just one of the risks, and a lot of the risks are sitting in silos. So for me, it's to branch out there, making sure that I can go out there and say, what can I practically do to weave in cyber with all of these other enterprise risks to make sure it's practically, it's working and people getting the information that they need to act on stuff and being proactive.
Jakub, thank you. Let me begin with the first question, and Jessey, let me ask you the first question. Everyone knows cyber attacks. Everyone knows cyber attacks affect a lot, from confidentiality, profitability, availability, brand, anything you can name under the sun. And the rising incidents really represent a big threat, perhaps one of the biggest threats to organizations. If I ask you, what are the biggest threats that you are seeing as part of that, and how is the business model changing to take care of this increased level of cyber risk?
All right, thank you. In terms of risk, I want to speak not necessarily as a CISO or information security officer, but probably just from your risk area, ERM, second line. So as a risk manager at second line, I would say my number 1, 2 concerns as it relates to cyber and the uniqueness of cyber risk, and not only cyber risk, but technology risk in general, is the complexity of cyber risk, as well as the rapid speed of technology changes. That in itself changes your set of risks and your risk profile on an exponential basis. So in terms of complexity, just to break that down a little bit, for cyber risk and technology risk, if you were to look at the layers of technology risk, cyber risk is very unique, where you can look at the infrastructure risk, you can look at application risk, you can look at the business level, the process interdependencies, you can look at the service providers and their cyber risks. If you look at that whole layered approach together, you can have one risk in one layer, or you can have multiple risks in all of those layers, which is compounded. Very different, I would say, than the rest of ops risk. Secondly, that risk not only affects cyber risk profile, but it affects your ops risk profile, and it can affect your ERM profile altogether. Dependent on where that cyber risk is happening, if it happens to your financial reporting systems, it can impact your financial risk, it can impact your credit risk. So very unique, I feel, is technology risk in general. Secondly, in terms of rapid change of technology, we as risk managers need to evolve our responsibilities as with thought when rapid change occurs. We might be living in a very traditional risk management perspective, and so what I'm saying is it has to force our business model to change. A couple things I have done through experience is that I believe a dedicated set of resources that are technology focused is required. No longer is the day that I can be doing some of IT, some of business, but I really believe you need a dedicated team to focus 100% on technology risk. Secondly, I believe you need to develop a very unique and customized technology risk oversight program, separate or integrated into your ops risk program, because no longer is the day I can follow my ops risk program, because there are certain unique risks in cyber that you need to have a customized program. For example, Cyber risk and the uniqueness of timeliness. You cannot respond to a phishing attack 1 week later versus the first day is better. So our program in the second line has to embed some sort of timely identification and response.
Awesome. I'm going to pick up on the business model here in a second. But before I do that, I'd love to ask the consigliere your view as to how you look at that same question in terms of what Jessey talked about, cyber risk versus operational risk, the two different programs, and how is that sort of business model you see that changing?
I'll provide a use case that's recent. I think the lines of demarcation are getting blurred and blown away right now. Case in point, I spend a lot of time doing compliance-related work, especially as it relates to our contracts. We're a federal contractor where I work, and one of the things that we have to be compliant with, because we do a lot of business with the DoD, is a particular control set and a particular acquisition clause that says, thou shalt have this control set in place. Not only will you have it, but all your supply chain will have it as well. You're not allowed to give them government-sensitive data with particular markings if they don't have it. Otherwise, you run the risk of maybe not getting considered for the next recompete, maybe not being able to compete and chase contract work at all. That's still kind of a forming space, but the point is, I had to tell business unit leaders who are not used to being told anything from an ultimatum point of view, not that I was delivering it, but this was being delivered by the government. I said, you have a choice here. If you decide to continue to use subcontractors who have self-attested to not be compliant, I'm going to need for you to go ahead and sign this risk acceptance form so when the auditors come knocking, I can hold that up. They didn't like that, and it was a forcing measure to drive change to where they had to say, from the CEO on down, we're not going to do business with them. And they had to make that cold turkey decision. But it was the right decision because it forced the business to use a new model. We're going to vet these people before we bring them on as subcontractors. It will be part of the teaming agreement. It'll be treated like anything else, like a financial check for solvency, anything. So these lines of, that's an InfoSec risk, so I'm not worried about it. No, it's a risk. It's a risk and it has a potential impact. So that's kind of where I find myself playing as I work with other business departments and units, explaining to them, here's what it is, here's what's coming, here's the external constraints. And in my world, it makes it much easier if the language is included in the contract. And I said, we're not having an academic discussion here. Right. You have to comply. So.
Great use case. And what was evident in there, was this not the discussion about the cyber risk and the changing and the impact of the business models, but what is evident in there is the skill base it takes to sit in your position. So it's not just about knowing the risk, it's how to operate in that environment and how to exert the right kind of power at the right time and how to do it and get the result. Let me pick up on the business model that Jessey started to talk about. And let me turn to you, Jakub. And if I was to go a little bit deeper into it and say, how is the organization's framework for managing operational risk expanded, perhaps to include cyber risk? Does it include IT and cyber risk, third-party risk, compliance risk? There's some obvious answers there. But what I would love for the audience and myself to hear is, along with this question, what we talked about before coming in here is, traditionally, in this conversation, when we talk about risk, we always talk about first line of defense, second line of defense, third line of defense. And here we are sitting talking about a brand new threat, maybe not so new, but it's a threat. Garrett just said, well, it's just another risk. But what does that mean to us? Does that mean that we need to look at the lines of defense in the same way, or maybe a different way? And I'd love to hear first your view before we ask for a contrarian view.
So, and I might have a little bit slightly different opinion on the 3 lines of defense because I've been on each one of them, and it sounds so great on paper, but it's so difficult to execute it in real life, especially with those more complex risks. Some of the risks that are on, like say, treasury, that's very easy to define who's the owner, who's monitoring, and who's auditing. You start looking at third-party risk, cyber, and it becomes very murky very fast. And kind of to transition in with the business model change, our company is actually doing the business model change now, where we're trying to grow, so to say, and trying to change our business model to be slightly different. And that also impacts the structure of our entire company. So what we have done is, first we basically have a structure of where everything sits. So cyber actually has been elevated upwards in the company. It sits under the IT. The operational risk management has always been there, but now they kind of on par in terms of they still separated, which I personally think is good. Cyber or the experts to say, hey, what is the emerging risk? What controls do we need in place? And you have operational risk management. I can go in and audit then. You obviously don't want the same person saying, this is the risk, let me build the control, let me go and audit that. That's a big no-no in internal audit, to basically have a requester, approver, and disbursement of funds. So we have that, and they both report into the chief operating officer. From our point of view in the enterprise risk management, we're trying to also get more involved, whether it's to be on the same steering committee, but also to elevate our structure. So we are actually going to get now a chief risk officer in a company to make sure that we get elevated too. So structurally, we have been setting up the structure as the business model changes to recognize all of these risks.
Awesome. Jessey, what do you think about maybe parts of it you would agree with, but maybe another view?
I agree. The one thing I want to note is that for technology risk to be successful, one of the key things, and again, I'm really trying to move from a traditional point of view on IT risk management to, say, a new perspective or consider a holistic approach, which is for IT risk to be successful, we need to be able to consider IT cause and how it impacts business impact. So we, as the IT risk folks in the second line, need to be that link between the generic IT causes that are reported to us, such as phishing vulnerabilities or excessive access, and really translate it all the way through the different levels to the board in a way that is specific to business impact. What does that mean? So what? What system did it impact? What business process did that mean it impacted? And then how much money in that sense can you say you lost because you were unable to do X number of loans or trades because that system was down? So I really feel one of our obligations is to be that connector between IT and business impact. In terms of first, second, and third line of defense, I love this. When I set up my department, I was trying to figure this out, and I think it was the first time it was written on paper, these lines of defense. What I realized is that, we have, say, for example, a CISO. I would say first line of defense is your frontline business, and what is, again, very unique for cyber and technology is your first line also consists of your IT folks, your IT support that supports the business. That is both your front line. So your SecOps folks that are sitting in supporting the business and watching our security day to day, they are considered your first line of defense. Second line, I would say, is us as risk managers, where we are the ones who are almost translating the language brought from us from the board in terms of appetite. 1.5 for me, at least in my use case, my business, in my specific company, I would say is my CISO. It's also my vendor management office. It's also my EUC office. It's also my BCP office. All those who set programs and policies, they are my 1.5. I am too, where I will look at their policies. I will see if this is in accordance with our appetite, and I will also look at level 1. So it doesn't matter, because when I speak to other companies, their CISO might be in the first line. Their CISO might be in the second line. Really, it doesn't matter what line you're in, as long as you can distinguish each party's roles and responsibilities. and make sure you're not duplicating efforts,
Right.
and make sure you're not missing anything.
Great. Garrett, I'd like to turn to you and perhaps pick up a little bit from there, but also talk about how can organizations then enhance the coordination and alignment between cyber, operational risk, other second line oversight functions to improve the visibility, the reporting, the communication at a board level, and then how to develop that comprehensive strategic approach that goes across the company. And how do you do that? How do you make that happen? How do you make that culturally happen? How do you make that framework happen? How do you make that program happen?
A good question. A lot of questions. The InfoSec function or the cybersecurity function or whatever you want to call us has to participate in ERM or ORM. There has to be a well-defined program. The reports have to be well-defined. And then the toughest part is you have to define that common taxonomy. What does it mean? Why are we measuring it? So then, so then what? Who cares? What do I do with this? Those things are challenging, but I will use my own organization as a use case. We have a well-developed, well-integrated ERM program that's globally adopted because we're owned by a UK company. And the risks at a high level are championed and reported by the CEO. So that's one thing that's good, is that it's rolled up to them and they have to be educated on, okay, what does this mean? What does this mean that it's medium versus high? What do I do with that? And it's done regularly, and it's done in front of two sets of boards, both the parent organization as well as ours, and they ask questions. And we are educating them with information that, quite frankly, and this is the tough part with boards, you can tell when a board member doesn't normally receive bad news, because the first time you give it to them, they act like you're crazy and everybody else is sane. And I experienced that when I started in my company, to where they're like, oh, you guys must be incompetent. I'm like, no, we're reporting what it actually is. Mm-hmm. And we need to have honest communication with the board so they can see the liability where it sits. One more thing, we just recently established some key risk indicators as a reporting metric. And I've been pounding on them for a while, saying, I need for you to, in one statement, tell me why I'm measuring this, and in the second statement, say what the standardized measuring is of this KRI. We eliminated some because there was struggles around that. But here's the good thing. It's already translated into efforts where those that had convenient ignorance before, no longer. And they're getting educated in the process. We're going to say, oh, I understand that risk. You've explained it quite succinctly. Thank you for that. We'll need to make a decision. We either mitigate it or we accept it, essentially. But we're knowing what we're accepting. You're saying this is what it is, this is what the impact is. And translating that and actually seeing those KRIs drive real positive change in the operating environment, because I've already seen it with a few of them, I'm like, that's the point. So that's something I might encourage others to take a look at if they haven't. It can help. But KRIs is not only a solution, it's just one reporting mechanism that we have.
Okay. Jakub, I'd love to ask you to give your view on that, but let me pose another question to you in continuation of that. So today, boards and senior leadership increasingly let's just say on a generic basis, for lack of a better word, recognize the fact that the solution to cybersecurity in particular lies in the broader people and processes of the institution. We heard this morning our keynote speaker talk a lot about the culture. He talked a lot about safety being the culture of one of his portfolio companies. We heard the panel talk about processes and people as well. So how can organizations then engage employees throughout the organization and then drive an active program to create that risk-aware culture across cyber risk and ORM?
Thank you. And I work for a company that a few years ago, a couple years ago, came out of financial difficulties. So if you can think about a company that all of a sudden became increasingly risk-averse, centralizing decision-making and actually moving the decision-making up from the front lines, kind of higher up in the organization structure. So that's kind of what we dealt with. And now, as we're trying to grow and we are trying to be faster, you can't wait for a decision to be made 3-4 lines above you. So we recognize that, hey, now we got to do something else. But the people who are on the front line, again, they were just pitching the decisions up. So now they're going to potentially have to make those decisions themselves. And so there's several programs. Cyber has its program where it basically educate people. It does the phishing attempts. It does advertising in the hallways and all of that. We also, as part of ORM, we actually sat down with each risk owner for their enterprise risks and developed dashboards. One of them was cyber, not surprise. Technology was another one of them. And we use those dashboards. In those dashboards, we basically break down the risk into key risk drivers, and we even have KRIs as well. And we use that to go out and sit, whether it sits in staff meeting, whether it's using senior leadership risk forums, or any other communication and collaboration we have throughout our organization to educate people on more of the risks. And lately, we actually starting to roll out a smart calculated risk program, where it started with educating people on risk. What is risk? How should they think about it? What are some actions they can take? What are the ways to handle risk? And now we're doing the phase 2 of the risk program, smart calculated risk. We're basically putting in a structure in place to let people be more engaged, especially at the very lowest levels, the people who are facing the risk themselves immediately, to be able to be engaged, being able to do something about it. So that's what our company does right now.
Awesome. Jessey, how about yours?
With a new team and a new program, I'd like to say we're trying to change the culture in terms of who we are to first line, who we can be to the board. I report directly to the board. One of the things I've tried to do is, instead of, and you used a good word, risk adverse, because we are low risk, conservative financial institution, low risk, and the risk adverse to everyone would mean risk at the second level is telling first level, no, 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 no. And so this cultural shift that I have tried to do is we're not risk adverse, we are prudent risk takers, and we reward innovation. We are not only looking at the CIA triangle in terms of IT risk, confidentiality, integrity, availability, but we are pushing to strive to add 2 more words, which is innovation and agility. And so because we're a new team, I feel it's easier to do that, to say we're new program, this is our thought. And we brought that straight to the board as soon as we were established, and we're trying to sink it into the minds of the first, second, third line as well.
Okay, thank you, Jessey and Jakub. I'm going to, Jessey, just stay with you for a second, and I would love to get yours and Garrett's opinion. Sort of shifting the topic a little bit, we know that we have regulatory frameworks that have been developed on cybersecurity. I shared with you and the audience, in my travels around the world, I've seen different frameworks being utilized across the world. You have some in the US, you have NIST, you have others, you have cyber fortification initiatives, HKMA, you have Singapore monetary authorities, you have Bank of England financial conduct authorities, et cetera, et cetera. I'd like to start with you, Jessey, and ask, Does your organization align with any of these frameworks? And how does that really work? And does that really work for you or not?
So I'm sure my perspective is going to be a smaller company, US-based, a couple of territories, New York, New Jersey, Virgin Islands. So we are not necessarily international, looking at the international regulations. Within our US base, we focus on COVID-19, NIST CSF, SysTop 20, which is kind of right now are dominant. However, what we are establishing, before we can even think about regulations internationally or in California or other places, is do we even have a process in place within our organization to identify new regulations and execute what is the right approach? Is that the responsibility of the CISO? Because the CISO then would have to develop and define what are the appropriate controls, encryption in transit, data in transit, data at rest. Is it compliance? Is it legal? So almost like most companies have a CERT or a BERT or many different acronyms they have in terms of what's their execution plan. Similarly, I believe, and we're doing that now in our organization, is a proper plan to be able to identify and evaluate external, including international regulations.
Awesome. Garrett, I'm going to ask you for sort of a quick opinion on that, and then I'm going to pose another question to you that is going to be a follow-up of that. Go ahead.
Okay. Well, different organization, obviously. So, I work for a federal contractor, and I can tell you predominantly what drives our regulatory compliance is going to be, is it in the contract? I mean, that's kind of the simplest way to boil it down. So, we have contracts that have very strong language in regards to PCI DSS for credit card processing. We have ones that have strong language for PHI based off of HIPAA. We have, others as well that are probably less familiar to the audience, but I think you get the idea there. Just to expand it really quick, the more difficult thing to kind of piggyback off what you're saying, is it the CISO's responsibility, is you've got to determine what the requirements are, and there needs to be traceability into what your actions are going to be, which I think is what you were getting at. And that is challenging. I'm actually working with my counterpart over in solutions architecture to make sure that when cloud use cases are stood up for a particular need, that those requirements are well defined and translated. And I was pointing out that you've got regulatory frameworks that feed into that, you've got organizational policy that feeds into that, you've got what's in the contract that feeds into that, on and on and on. But it needs to be neatly mapped and traced, and at the end it's like, okay, so here's what you're doing. If you have that, you have a baseline, right, for moving forward. So easy to say, a little soundbite, but that's obviously the ideal state.
Right. I'm going to throw a quick question, and just would love to know, just your answer on it, and then I'd like to open it up for the audience for Q&A. How do you trade off, or what's the best way to even quantify a trade-off between a risk appetite and cost of controls and the impact of earnings? And I guess I'll give you a follow-on, and you can pick whichever one you want to answer, or maybe they're connected. When do you really quantify risk, and when do you really look at risk qualitatively? We'll start with you, Garrett, and then we'll just go that way, and then we'll open it up to audience.
I would just quickly reiterate what I stated before, which is, depending upon the audience, there is no risk that's mitigated without a cost. Generally, there's financial cost in there. Sometimes not, but generally there is. And it's in that quantification where you have to make people realize, and this is our ongoing struggle, right, day by day. Saying, I don't want to have any risks is silly, but yet people say that out loud all the time. You have to put cost to the mitigation effort clearly, succinctly, quantitatively, so they go, oh, that's going to cost me $1 million, or oh, that's going to cost me $10,000, and they can do that, cost risk trade-off. which everybody needs to be able to do, because we don't accept all risks and we don't mitigate all risk, right? So,
Thank you. Jessey?
What I would say is to the board and to your management, senior management, again, what I mentioned before about as technology risk to really provide value, we need to be able to speak in terms of business impact. So traditionally, again, you have your IT metrics, but what we need to do as risk managers is to translate or link those IT metrics to business metrics. So IT-centric metrics, translate them to business. You can't do one without the other, and I believe we have both probably in our entities, but just connect the dots. And when you connect the dots and you map, if say, a very simple example, again, I mentioned was system downtime, and you have those IT metrics, you map it to the board or to your senior management on, well, this impacted our trading, this impacted our key critical process, which is part of our mission statement. And it will really help you assess the proper thresholds, and that is almost like a bottom-up approach versus, then you take that and those results and then you compare it to the board's risk appetite statement coming downward, and you'll find a proper place to really be able to interpret those business metrics and say, is this appropriate to our organization, and make proper decisions at the board and management level.
Thank you. Jakub?
If it was that easy. So in enterprise risk, we with the actual risk appetite, how to write it, and then educate everybody on through the company. And it's funny because resources are limited, yet everybody wants to basically minimize the risks, rightfully so. But there's a trade-off, and right now, if you look at a siloed approach, which enterprise risks comes in to try to mitigate that, the siloed approach that everybody has their own budget, they mitigate every risk, so there's duplication of efforts, number one, but there's also the fact that you basically, instead of splitting a pie of money and risk, you're splitting 12 pies of money. So that's what we're actually going to be working on next in my company, is to figure out, well, how much risk do we really want to take on? And if we take on more risk in one area, then we have to minimize it in another area. And cyber is obviously one of those risks where we're not going to be taking a lot of risk on there, which means that how do we translate that into our other areas, and how do we communicate with the other areas and say, we need to talk about it, because right now everybody is just using a lot of resources to be too risky.
Thank you for those comments. What I'd like to do is open it up to the audience for Q&A now. And if I think we can see some hands, and somebody's going to bring the mics.
I really liked your talk, Linda Chapman up from Montala. I want to build on the point of actually assigning a cost to the business units for assuming too much risk. So I'm an expert in third-party risk management, and it seems to me that that might be an easy place to start, right? Because you can see how much risk the business is taking on according to the third parties that they have contracted with. Do you think that that would work, is to assign some sort of a cost of capital for their operations? Oh, sorry, I was addressing that to Jakub.
So can you repeat the actual question?
So what I'm thinking of is you're talking about being able to assume a certain amount of risk for a certain amount of cost. If you have a good third-party program, you can actually see, because you've already measured how much risk different business units are taking on with different relationships they've entered into. So I've been thinking about this for a long time. Do you think it'd be possible to take that one step further and assign a cost of capital for towards their operating costs based on third party?
So right now we almost done with our developing a third-party risk program, and another company will actually own the third-party risk program. That is, you could do it as a starting point. A lot of risk can be quantifiable. Right now we're rolling out our economic value model in the company, but operational risk is very hard to put a dollar amount on. There's a lot of people who feel very passionate about, hey, my risk is way bigger than yours. But once you start kind of peeling back the onion and whether you look at, hey, we're going to spend this much with a third party, and this is really what's at stake, you could go that route, and then maybe you can see if they would understand it better. But I think operational risk is just so hard to define, not only the scope, but also putting a dollar amount on it.
Thank you, Jacob. Go to the next question, please.
Hi, there's been a trend over the last 5 years, at least internationally, for large corporations to move the CISO out of the way of the CIO, because what they've been finding is that in some of the cases, backdoors have been put into applications that IT was developing, and because the CISO was under the CIO, they didn't have the same level of authority, if you would, to be double checking everything and such. So that's been a move, and what's been happening is in some of the organizations, they're finding that's great, but they're finding that there isn't so much of a communication now between the IT and the CISO, and that's become a problem. And looking at some of the events that have happened, not in the business continuities. We know the city of Baltimore, we've been reading it every single day in every cyber magazine this week. For the last 2 weeks, city of Baltimore had ransomware 2 weeks ago. As of yesterday, they were finally just restoring their email after 2 weeks because there was that gap between at least the initial assessment said it was because there was a gap between the CISO, the business continuity. They weren't planning what if we have what if the confidentiality, the integrity, the availabilities are messed up, between the two. So how do you see the need for the separation for the CISO to be separate from the CIO, and yet still maintain that sharing of information, the camaraderie, if you will, that was there before?
Thank you. It's a great question. Garrett, let me start with you first, and then I'm going to ask Jessey to comment as well.
You're going to put me on record on that, aren't you?
I asked you for a purpose because
do you have a conflict of interest with your present reporting structure? Is what the question is. Obviously, the mission of the CISO is to detect and respond to threats, right? If I was to put it in a short sentence. The mission of the CIO is to keep the trains running on time. There is going to be friction between that, and I think it's obvious that if you have one reporting into the other, one's priority is ultimately going to trump the other. This is just honest. This is something that the CISO role was birthed in IT. Quite frankly, it should stay there. I self-label myself as a risk consigliere, and I feel that way about it. Security was birthed as we're controls. We're worried about controls. We're worried about risk. I'm as worried about risk as you guys are, because it's not being treated as impactful as it can be. Sometimes the risk is really high, sometimes it's low, sometimes it's in the middle. To your point, the CISO role needs autonomy to function, budget autonomy, org chart autonomy, yada, yada, yada. There have been organizations who have realized this. I don't think that's the norm yet. I think the norm is still CISO reports into CIO. I will say that's a separate issue from communications. The CIO being able to pull a trump card and saying, well, we're going to do X. That doesn't prevent me from doing that advising consulting role, which I do, and document. I say, hey, here's what it is. I've documented it. Please advise. And I have other avenues to communicate risk, such as in our ERM, to where if it's being stopped by a particular individual, it's not going to stay there. It simply cannot. But yeah, those are tensions there. You can just go and ask Equifax about that. CISO now reports directly to the CEO and the board of directors. That was not the case before.
Jessey?
I think my specific organization lived somewhat through this. Our CISO reports to CIO. However, we have a dotted line. He has a dotted line to the president. Some can say, should he have a dotted line to the CRO? It may be too soon, many years ago, we had the CISO under ERM. At that point, again, I use the word I use the keyword too soon because it's almost as if, okay, what does the CISO do in ERM?
Yeah.
Some places it works. Again, as long as you've clearly defined the responsibilities. At that time, it was not clearly defined. Now it's interesting because now that I look back at it, it makes sense now. I see, because what they were trying to do was this IT risk, almost, the CISO, who is going to, if a CISO could sit a second line and be able to, again, translate appetite and monitor and independently assess if what's happening at the first line is appropriate and challenge effectively, then they can be, honestly, wherever they can. But it can work under CIO as long as, again, I think it's a good idea to have them report directly to the president. And I also would recommend CRO. You need everyone on the same page who are first 1.5 and level 2. You need everybody on the same page.
Want to add something?
Yeah, and that's what we do at our company. So we have the CISO report to the CIO, but we have a very tight connection in terms of regular communication, continue to know when issues actually arising, because then we actually have the direct avenue to the board or to the ELG so that we can say, hey, we need to nip this one.
Okay, awesome. We have time for one more question.
I'll go.
Go ahead.
So I lead the cybersecurity practice at the Cleveland Clinic. So we provide care. And the question I have is my practice, we're starting to use FAIR model for risk quantification. This is what we think is a way to go, going forward. But other organizations within Cleveland Clinic still use the heat map, high, medium, low. So what I'm confronted with is really to make a decision to how do I present our information when the organization has traditionally just used high, low, medium. How do you communicate those changes to the board that you are really approaching a very innovative way to presenting the risk? Any thought?
Jessey, you want to start with that?
Yeah, just a question. What's on the heat map? What's the subject matter? Is it the residual risk of certain risk scenarios related to cyber?
Well, what I'm bringing is basically, yes, I'm bringing the risk, I'm bringing the residual risk, and also I'm trying to put a cost around it. The other organizations, such as the clinical care environment, they are not bringing those. They are just bringing high, medium, low risk. So we are basically facing two sets of risk measurements, right? So I have a challenge to communicate that. I'm just trying to get some thoughts, some advice on really how should I position myself in communicating my risk that I've calculated and see that, and also give them ways to invest in the right way.
So I would say for cyber risk, some expectations, or at least some of my expectations, are to be able to report, say, to the board your cyber risk scenarios that are inherently, your top 5 that are inherently high, or your top 5 that residually they are high. You want to show the board what maybe keep it to 3 or 5. What are the key ones to them? And in your report, you're saying you also have quantification of that? Which sounds great if you can do it. I have seen some GRCs that actually assist with this quantification, mapping your technology risks into what I was saying, into your business risk. So even with the use possibly of a GRC, that might be a lot more easier. Mine would be a lot more manual right now. And you were saying you want to be able to make sure what you're representing and reporting to the board is in line with another risk group?
It will not be aligned. I know that.
Okay.
Because they are still using the traditional model.
Okay.
And we are trying to, within cybersecurity, we are trying to be more innovative and trying to risk so that people can speak the same language. Because we found it very difficult to convey cybersecurity risk because it changes, it's dynamic. So when we started putting the scores in the financial aspect of it, people tend to get it more and tend to react a little bit quicker.
This is probably going to elicit some laughter, but it's just the truth. Recently, I put together a scorecard for our posture for websites, SSL scorecard. So, don't use SSL 2 and 3, use TLS 1.2 or better. It has A, B, C, and F It scores on there. I showed that to the board and the executive management team. They lost their minds. Oh my God, we have Fs? Oh, Fs are bad. That showed you that metric worked because they immediately understood it. We all got report cards when we were kids in school. Fs were bad, As were good, easy to translate. I even color-coded them. But the point is, you've got to see what resonates with your board, with your executive management team, and even though it might seem a little silly to you, roll with it. So if a stoplight chart works, use a stoplight. It's going to be some trial and error there, though, I will tell you that.
And just one last thing. I would caution about potentially throwing out. So the way the board reacts is if something is broken because something went red, unless that metric is really truly impacts the entire enterprise, all the resources are really going to go there, which means all the other things that you're trying to mitigate just got defunded. So you got to try to find a balance, communicate without panicking them.
Jessey, you wanted to add something?
Yeah, one last thing. Now to what your point is, my ultimate goal too would be to bring to the board a scorecard, and that word triggered what I was thinking, which is a health check in a sense of what is our cybersecurity risk posture today, not only cyber, but all of the technology areas that I'm focusing on. So comparing the appetite, if your appetite is low, and comparing that to your current scorecard, your current health. Your current health will have multiple attributes feeding into it, a couple of them being the incidents that may have happened, the control deficiencies that happen, the SOX issues, the audit issues, the operational breakdowns that happen related to cyber, and as well, including for us, we're doing CMMI maturity to cyber. And so all of that together in a way, and now what we're talking about is pretty much like your annual risk assessments. If you're doing that, that's in a way presenting to the board, this is our risk level appetite, and this is our current state. Our current state is equal or not. That is pretty much at the highest level what the board would typically state.
Right. What I'm going to do is, as I said in the beginning, I would encourage all of you, including myself and other MetricStream members, to seek out the panel. The time that I've been introduced to them and I've come to know them in very even short conversations, the amount of knowledge is very, very deep, the experience, and definitely have opinion about how to make it successful. Let me ask the panel to close with the following, and maybe with the, they can give their comment on this overall topic, but I'd love for them to close with the following. And the way I personally look at a new topic or a new area or a new sport, when it becomes too complex for me, is to boil it down to simply these two questions that I ask. What do I absolutely need to do? And what do I absolutely not need to do? So tell me one thing that I must do, and tell me one thing that I should absolutely not do. So let me start with, and we'll have Garrett close in the end, but we'll start with Jessey first and ask Jessey, when it comes to the topic of convergence of cyber risk management, ORM, and you were an advisor to any of these companies, what would you advise as absolutely doing and spending their time on? And what would you advise them absolutely not to be spending their time on, no matter what?
Okay, absolutely spend your time on make handshakes with your first line, your 1.5 line, your level 3 line. These handshakes are very important to actually be effective. These handshakes took me a long time to make and be friendly and realize that we need to work hand in hand to actually help our company. So for the benefit of your organization, coordinating and working with all levels of defense is very important. Honestly, that had to be the first thing I had to do in the first year or so in developing the program. What not to do? I guess what not to do would be, as risk, I feel it's a good thing that we're not the ones to say, no, you can't do it. So I think our answer should not be no. We are not audit, where we're saying, no, you must do this. As risk professionals and the second line, we are to advise, and we are to say, okay, Do you realize what you're doing? It is important that we say, if you don't agree or you want to accept, let's document this. But it is not our job to say no. There is a very, grayish border that we need to define between first line and second line. It is first line who makes those ultimate and preliminary business decisions.
Thank you, Jessey. Jakub?
So from my perspective, to your point, shaking hands is great, but also having that open and honest conversation. So once you gain people's trust, to ask them kind of what's going on. Part of my job is to look at the entire enterprise, so not just specifically cyber risk, but so you can have a big picture about what's going on. And then one thing not to do is to assume that it's taken care of. So I don't know if any of the companies presenting here is like when they say, well, everybody's a risk manager in the company. That's like, if everybody's a risk manager in the company, nobody's a risk manager.
Awesome. Jakub, thank you. Garrett?
To do. Build rapport. And I'm kind of stealing yours and just saying it in 2 words, but really it's what it is. It's building rapport. I can tell you in my function, if I'm not building and maintaining rapport with literally every other individual and all the other departments, I shouldn't even be there. I mean, I'm just useless. So that's what you should do. What you shouldn't do in that process is be dismissive of people's pain in their departments and in their execution of their work. So to your point, we don't say no, but I do not necessarily recommend that they adopt every product, do everything that they've set out to do. But I lay out my case for here's the downsides, here's the impact of that. So that way they can look through it and go, yeah, that's pretty black and white. He's right, I shouldn't really do that. So,
thank you very much. I hope everyone learned a lot, at least topics that you learned, maybe put some inquisitiveness in your minds. But I want to thank the panelists. I certainly learned a lot as well. And ladies and gentlemen, we've coined a new word today, risk conciliary. Thank you very much.